Sims Company, a manufacturer of tablet computers, began operations on January 1st of the current year. Its cost and sales information for this year follows. Prepare an income statement for the company using variable costing. The income statement begins with sales, 80,000 units sold at $350 per unit, $28 million. We subtract all variable costs. Direct materials, 80,000 units at $35 per unit, $2,800,000. Direct labor, 80,000 units at $53 per unit, $4,240,000. Variable overhead, 80,000 units at $32 per unit, calculated by taking the variable overhead, $3,520,000, and dividing by the 110,000 units produced. Total variable overhead, $2,560,000. Variable selling and administrative expenses, $800,000, for total variable costs of $10,400,000. Sales minus variable costs equals contribution margin, $17,600,000. From contribution margin, we subtract the fixed expenses. Fixed selling and administrative expense, $4,160,000, and all of the fixed overhead, $7,700,000. Total fixed costs, $11,860,000. Net income under the variable costing method is $5,740,000. Prepare an income statement for the company using absorption costing. Absorption costing is traditional costing. We begin with sales, $28 million, less cost of goods sold, direct materials, $2,800,000, direct labor, $4,240,000, variable overhead, $2,560,000, and fixed overhead, 80,000 units at $70 per unit, calculated by taking the fixed overhead, $7,700,000, dividing by the 110,000 units produced. Fixed overhead expensed as cost of goods sold is $5,600,000. Total cost of goods sold is $15,200,000. The gross margin is $12,800,000. From gross margin, we subtract the selling, general, and administrative expenses. Variable selling and administrative expenses, $800,000, and fixed selling and administrative expenses of $4,160,000. Total selling, general, and administrative expenses are $4,960,000. Net income under the absorption costing method is $7,840,000. Net income under variable costing of $5,740,000 is less than income reported under the absorption costing method, $7,840,000, by $2,100,000. This difference is attributable to the treatment of fixed overhead. Under the variable costing method, all $7,700,000 was expensed in the period incurred. Under absorption costing, only $5,600,000 was expensed as part of cost of goods sold. 80,000 units sold at $70 per unit. The difference can be reconciled by taking the number of units added to inventory, 30,000 units, multiplied by the fixed overhead per unit.